When we talk about personal finance, the first thing that comes in the mind of most of the millennials is investing in stock market, which in a way is a good thing, but there are other things also that we should explore to leverage upon. In my early 20s, I have done the same mistake in managing my finance, which led me get into financial crisis. So I think learning to manage finances is the most important skill of the 21st century. And in that case, today we are going to talk to a person who is who has invested his 10 plus year in managing finances. He has also managed a lot of government funds, and he's personally a behavioral finance coach. Today we are going to talk to Midhun Noble, founder of Insightes and HEFA, which is a non-banking financial company. Uh, I personally had a lot of fun while conducting this interview because he is extremely talented and he's extremely experienced in managing finance. He has explained all the terms in a such easy way, and he has also shared uh, a quick hacks on investing in our early 20s that could gain us a lot of monetary benefits. So I would recommend you to please watch this video till the end, not just for the sake of a real content, but for the sake of a learning that you could have from this video. And trust me guys, uh, till the end of video you would learn a lot about finances. So stay tuned. Yeah. So shall we start?
Yeah, sure.
Okay. Uh, since I talk to a lot of entrepreneurs and I have this curiosity, so my first question goes to you is, can you walk us through your journey a bit of about Midhun being an entrepreneur of multiple companies? How this entrepreneurial kida started? From where did you got this that you wanted to become an entrepreneur, and how did your journey started?
Okay, yeah. It's a very tough question and very tough to pinpoint. Probably the funny part is I have a grandfather who had run 27 businesses when he was alive. Like,
Wow,
he's
wow,
he's start one business and it is something and it was not like really there used to be points where he used to make a lot of money and then he
uh-huh.
would lose everything in another business. And then he would
Okay,
start something else, he would make some money, then he'd lose it in another business. So he was
uh-huh.
that what do you call as that serial entrepreneur, but without having any insights on how to run a business sometimes. Because probably he was
Okay.
just he just first standard educated person. So what do you expect him to
Mm-hmm.
deliver on that front?
Mm-hmm.
From the time I was born, my mom's family has always been in business, and my mom hated the business part of it.
Mm-hmm.
So because my mom was the only person who did the college education from her family, so she's an engineer, and I mean, so she and me and like my father, like we always staying in the city. So for her, it was always about getting the job first.
Mm-hmm.
Like because for her, the father and business, everything is like a failed model of life. Like if you do business, you're gonna fail, and you're not gonna in your life with that, right? So anything that I would start, I think I like I was always very inspired by my grandfather. So first thing what I did was like my uncle gave me two rabbits to grow, like like small rabbits that I had as pet. So when you have generally when you're a kid and you have a pet, what is your thought? You have two pets, you like to take care of it. So what was my thought? This rabbits will give pregnancy for 10, 15 babies. 15 babies will give pregnancy for the next 15 babies. So how do you sell those babies?
That is your
Rabbits.
first business model, I guess.
Right. So this, I think probably eighth or ninth standard or something like that.
Okay.
And like, my mom was very smart. By the time the rabbits were pregnant, she said, we can handle it. And she gave it to my uncle off. And then he was like, he was having those rabbits for a while. And those were rabbits with blue eyes, and they had huge demand in Kerala at that time.
Yeah, yeah.
Um, and then I think in 10th standard or something, I like slowly picked up that in Photoshop and all are like trending up, right? I slowly picked up this Photoshop designing skills and everything. And we started making Christmas cards, like customized Christmas cards. That time it was a
Okay.
big thing. Like this is back probably 2008 times. And we used to make for like all the young guys in the school, who used to date someone and who had a crush on someone. So we used to steal their photos from Facebook or Orkut and then make a greeting card for them and then give it off. So that used to be like one of the first things that where I started earning money from doing something I like. But then yeah, like you said, like there's always this what do you call this dilemma of getting a job or cracking into IAS
Mm-hmm.
or running your business. It is always there. So then I was like, fine, let me not think about this business because and all the time I can see my grandfather doing something, some hangama or the other. Like, that's another lesson that is already there. And in my house, always these stories used to be repeated. He did that, he did this, or uncles did this, or uncles did that. So business was always looked down upon in my family. Like, it's something that you should never try. Like, it only makes you lose money.
Actually.
And that middle class glorification of job, right? Like saying, I like, we have brought a house, we bought a car, we own these things, we're able to do free education for you. That kinds of pushes your mind that this is a success model that you have to replicate. They went like that. So I did my undergrads. Then I did my MBA. I joined a public sector bank, the typical government like story of every Malayali. So, but I was not very happy. Like, even when I was in my MBA, I've done a lot of these micro entrepreneurship projects. Like, I used to do real estate in my college because if the students
Okay.
wanted housing,
Okay.
I used to, because I was like was a lot of Malayalis in my the college near me, right? So I used to know a lot of house owners from the church. So I used to put them in touch with them, charge a small commission for that and all. That used to run my show and parties. So I used to hang out with the guys who were like one of some of the top bands in Bangalore at that point of time. So they used to give me free invites for this DJ party there and all those things. So I used to sell these guest passes at a different rates to like classmates and everything. So like in all the hangama to just earn money
Yeah,
somewhere.
yeah,
So I
yeah,
knew,
yeah.
that tinkering skill was there in me to make something out of it.
Actually.
Yeah, yeah. But my first understanding of the startup ecosystem happened when I was in my MBA. And I had to do this internship with this guy called Narayan Ramamurthy. You can probably
Oh,
Google up, I've been probably checking up on LinkedIn. So he now, I think he's the founder of one of the payment solutions, very famous fintech payment solution called Global PayX or something.
okay.
So that time he was running a startup called Upkia. It was a
Ab kya?
location-based up. Yeah, yeah. No, I mean, it didn't come out. Don't even check for it. It was
Okay.
basically a location-based social network when Facebook was at its peak. So his idea was we need to have micro communities and all the things that's coming right now. He had thought that point of time, and I got the chance to work with him. So this guy was an IIM Calcutta pass out. He had like pretty good industry experience, and then he was getting into the startup phase. So he introduced me to understanding design thinking, research, like the traditional way of you thinking a business of something that's running and you make
Yeah,
money.
yeah, yeah.
That was completely taken. That concept is broken in my head by this guy. He gave me a lot of ideas, like why you need to think for the future. Why you shouldn't be thinking for an idea that can solve something now. Like he always used to quote the example of Apple. So like how Apple, like for example, if have you seen Apple Wallet now? Apple Wallet, like the latest Apple Wallet.
No.
Okay, if you get a chance, just go through the UI UX of that. It's like beautiful, So
Yeah.
Apple always thinks 10 years up, like
Yeah,
in
yeah.
the future, and then design something for that right now. So it takes a long time for your competitors to catch up to that, right? So that was like something that he taught me, saying you don't solve for now, always solve for the future. So a lot of things, like I think even how to do a user research, how to do all those things he taught me, and that made me kind of look at uh, the business problems that I was facing in a different direction when I joined work. So I used to work in a very traditional bank called Canara Bank. And so they used to solve, their tech team is like that very archetypical place where you have 50, 60 tech people who are sitting and working and coding on a product and then just doing troubleshooting after troubleshooting, like the very fountainhead philosophy of designing a product, right? So they were just doing that. Uh, and then that time I went there and I had these insights. And like, see, even for me who didn't come from a tech background, for them, it was like somebody who came from a different perspective for that. So that kind of gave me a lot of opportunities to work with a lot of tech products in the bank. So I used
Okay.
to work with them in terms of developing the mobile applications, like mostly reviewing the user interface part of it. So I used to enjoy that particular part of the work in bank. Also, I think we did some work in terms of making one or two banking products. So these were like some of the things that I was doing, but I was not very happy about my work. And I was first posted in Chimoga. So Chimoga is like another dead zone. So it's like, it's like a remote area, and
Mm.
you
Yeah.
basically you are just living there for like 1.5 years after like you lived in Bangalore for 7 years and you live there for 1 year, you go like
Oh
really
my God.
berserk. There's
Yeah,
nothing
yeah,
to
yeah.
do.
Yeah, yeah.
I kind of had my sprouts of depression and all those things at that point of time. Like I'm like, what am I doing in my life? This is the perfect model everybody said. Like, get a job, get a government job. You're set for your life. Now in 15
Yeah,
years, you're going to be
actually.
general manager. Yeah.
Actually.
So
Yeah.
and I was like, fuck, it's nowhere going to make me happy. And then I met my professor from college, who
Okay.
was a psychologist. So he introduced me to therapist. I did my personal therapy and everything. And that's a point when I really realized that for me, more than money, it's always about making that. And I always think from saying how many more lives can I make it better,
Mhm.
or whatever solution that I'm building needs to have some kind of a positive impact in people's life. So having understanding that core thing in me kind of shaped a lot of things that I did after that. Um, So then I basically first piloted a mental health firm with the particular sir that I told, who was my colleague from, who was my teacher from college. So we basically started a online mental health platform. This was way back in 2016, like
Okay.
not before all this wave happened. And I think that time we had talked to Kalari
Kalari Capital. Hello. Hello.
supposed to get into case start and everything.
Okay.
Um, and we
I guess there's an
hello,
issue with your internet quality, I guess.
is it better now?
Just a second. I'll just check my.
Hello.
Yeah. It's better now. I can hear you. Yeah.
Yeah. Okay. Yeah, it sometimes just goes for like a thing.
Yeah. So you said you met
Better?
with Kalari Capital. So I just want to know that incident.
Yeah. Case start and all, right. So I mean, so we didn't know the from a very bootstrapped kind of a thought, and we had some traction at that point of time, and we met with them and all those things. But I'm just telling, like, how all the different things, like that time, like for us at that time, we didn't understand how the, and that time startup ecosystem was very nascent in India also. Like there are some ways of getting funded, but you still didn't know how to crack the funding model.
Right.
So they
Exactly.
were telling, we need to grow at this X and that X. And we couldn't see that. Like we couldn't sit somewhere and see that kind of a scale for our business. We were running it like, so it didn't work out that way, and it continued to run as a project. So at that time, I got an opportunity. So I had left my, I've taken 1 year leave from the bank that I was working at that point of time to work on this. So then one of the GMs with whom I used to work called me and said, like, we are starting this new NBFC called Higher Education Financing Agency
Yeah.
for Ministry of HRD. Would you want to come and join it? Because like at that time only he was there. He was the guy who proposed the project and everything. So like only I'm there. Because you have this craze to do startups and everything, and this can help you, and this can also get you some capital for you to like invest in your business.
So is
I was
this
like,
a
fine.
joint venture with the Canara Bank?
Yeah, it's a Canara Bank with a Minister of HRD. So Canara
Okay.
Bank is like a fund manager. Like you see, Kalari Capital is a fund manager for a bigger fund, right?
Okay.
So Canara Bank was the fund manager for Minister of HRD in this particular project.
So do we receive all the funds from the Canara Bank, or do we have the venture capitals?
Basically, the 10,000 crore equity came from the finance ministry. So basically, finance ministry created a
Okay.
fund, like you have a Startup India fund. The same way they created a saying they want to infuse 8,000 crores of equity into higher education financing agency, right? So it's, I think when I initially started, it was 1,000 crores. So we started with 1,000 crores. 1,000 crores came from the government. So so how generally you do a banking system build up is you have first you will have some base capital, say 5,000 X or 4, like we'll take a smaller amount for you to understand, like 100 crores, right? So
Okay.
you use this 100 crore to lend to different people, like 10 different lending you did for 10 crores. Okay, so that your base is spread. So you can use this spread to leverage and go to the secondary market, like go to the bond market or a share market, and raise some 10x of the amount. Like you got
Okay.
my point. Like I have my 100x crore as equity, but I'll go to market and raise another 1,000 crores. That is
Okay.
the same plan here, where we
Okay.
wanted to create a base of 10,000 crores and
Okay.
then use that to create a corpus of about 1 lakh crores
Okay.
to reinvest into this thing. So basically, just saying this the 10,000, this first 1,000 crore is just trying out the model to see if the model is working.
Yeah.
Once you
Yeah.
prove the model is working, you leverage the market through raising like bonds. See, for example, I'll be raising bonds at 7% or 6%, if it's a like triple A government rated bond.
Okay.
And I would be lending that money at probably 8.5 or 9. So I have that 1.5, 2% variation in that pricing, right? So that's what the bank profit is. So
Okay.
even all the NBFCs, all the players who comes into the market, they always do this particular method.
Yeah. Okay.
So yeah.
This was
So
something new for
when
me.
yeah yeah. So yeah, so this is like for me also, like like I said, I've been struggling with a bloody bootstrap startup, and I go there, my startup capital is 1,000 crore, right? And
Okay.
what do I have? I have a paper in my hand. Like I've done nothing else for me. It's just a paper in my hand. So we had to do we had to design the whole NBFC from scratch, because there is no in infrastructure finance model in India. There was previously one company called, I think, DHFL, and there was one IDFC. The IDFC was one more thing that was there, and it flopped. Because generally what happens in IDFC is like in infrastructure financing is it's a very NPA prone area, because it's India first of all, and Indian project management is like very bad, and you're working with government institutes which already known for delays. Third thing is it never gets completed on time, because the government, one government or the other will keep fighting over some property, some land, or some person wants to buy it. That's a very risky thing. So our first thought was, how do we make it a risk-free business? Like, how do we make this NBFC a risk-free business? We created a zero NPA model. Like, even now, I think I left HEFA in 2019, but even till now, they don't have any NPA in their book. So what we did was we created an escrow flow. For example, saying if your repayment comes after 6 months, you pay me the advance now, and I will invest the funds for you for the 6 months. And at the end of 6 months, I will take it into my loan repayment. So we always had 6 months to collect the repayment. If any default was coming, we could still plan for 6 months to adjust for that default. And second thing was, we ensured that the government is always a guarantor to pay any default if the institute is making. That way, that was covered. And then we brought insurance for machinery. It was not there. Like, to be honest, in India, if you're looking at IIT, AIMS, even the hospitals machinery that they buy, right? In India, they were not covered with insurance. So if any damage was happening, then they had to pay the full price to repair the machinery, or they had to dump the machinery and all. You would have seen, you would have seen in some hospitals, they would just dump machineries and all. Right? Yeah. This is the thing. Because they didn't have any way to fix those machines. They just used to buy new ones. So we introduced insurance to reduce that particular risk. And then we had to build the, I don't know whether it makes sense for all these things for me to tell you. You tell me, okay, like, I don't want to hear these things. I'm more than fine to tell you.
No, carry on. So, it's a fun.
Yeah. Right. So we had to build, so even for lending softwares, so there are traditional banking lending software, like say Finacle from Infosys, or you say, what is it, IQ or something from, just made by, I think, Chidambaram's son, the congressman's son, right? And FlexQ, the company is FlexQ.
Yeah.
These are like some of the existing banking solutions that are already there, but it cannot work in a, what I am saying as a infrastructure finance. Because the thing is, there you need to do project management, because you need to follow up all the projects, and then repayments happen probably in like 6 months or 1 year, not like on a monthly payment cycle, right? So we had to build a software lending thing from scratch, which kind of exports me to making understand how to build a industry scale software and stuff. So I did that for about 1.5 years. So we did about 8,000 crores in the 2 years. We lended about, so I had like a huge number of IITs, IIMs, AIMs, all in with whom we used to work. So out of the 21, I think recently there was a news saying, out of 21 names which were approved, 15 names are now operational, right? So most of the aims, that funding has come from HEFA. Because these projects are stuck from 2005 or something onwards. They're approved long time back, but there's no money for the government to do it. So HEFA basically funded all the projects. So in the National Cancer Center in Jejjer, all those projects are funded by Kalyani Aims. All these are funded by HEFA. So they kind of brought a competitiveness for the education industry in India, so that they can also compete with the global 250 institutes, like we say Harvard or MIT. We are also at that standpoint that we are able to build that infrastructure for that. But I think what happens is, like, when you remove some people, we had a very good guy called Subramaniam, who's an IAS officer, was the secretary of MHRD. And then that guy got removed, and they put another Ullu guy over there. So when that guy came, he doesn't like HEFA. That's a problem in government institutions. He doesn't like HEFA. He's like, why I have to pay loan? Why don't I just pass it on to the budget? He doesn't understand the spread happens for 10 years when you're putting in a lending system. Otherwise, your budget portion needs to be made upfront, and that money has to be blocked, for the next 1 year. So when you say 2,000 crore budget needs to be blocked till it's allotted. Here, there is no blocking, right? You only have to pay the repayment. And government also incurs cost of capital. Like, even if a government has to borrow 2,000 crores, it still has to borrow at probably 5% of whatever you says repo rate or reverse repo rate. They have to borrow at that time. So I was kind of bored with, when the politics started, I was like, see, my work is done. I built something beautiful. I enjoyed the show. I built a team, and we are doing this 8,000 crores with 15 people. So that is like probably one of my biggest achievements. Delhi government.
Did you exited from the HEFA Institute, or?
Yeah. It was in 19 I left. It was 19 November I left.
Okay, so what was your exit value? I mean, like, how did you exit it? Exited with?
So no, we didn't have any equity. There is a government run thing, right? So
Okay.
we didn't have any exit as such. So we had whatever our like package and our emoluments and like bonuses and all those things. That was the only structure we had. And that was also another factor because see, I know for a fact that when I was scaling this, I was not really making any
Yeah, yeah.
like the incentive to stay there was not there. Like if it was my own baby, then I would probably like even if
Okay, okay.
somebody's eating my head, I will go sit there, right?
So
So
basically,
I
it was a government funded startup. I mean, like a government funded bank
completely, yeah,
completely.
yeah. We were running the show. We just got an idea of how to run a bigger
Okay.
show, like like a how to run a proper like 8,000 crores close to 1 billion business, right? So
Yeah, actually.
yeah, yeah. So that's what we're doing, and we are doing it with about 15 people. So that is the biggest thing. So and that model, like in the whole government liked it, like because they were like one manpower is very less. But
Mhm.
it's very operationally efficient in terms of work. So we used to disburse loan in 1 day. Like generally, infrastructure finance disbursement happened 15, 20 days. So that was some of the things that you could do over there. I left it, and then at that time, this mental health thing was doing reasonably well. So I was like, fine. I mean, see, it's definitely going to pay me my salary, or at least like 50% of what I was earning at that point of time. Let me use this as a platform to build something more. And I left it, and then I got exposed to the disability space. So that's when I realized, like, this is one space in India. Like mental health is still already a taboo, and disability is like a whole different section in that which people don't even want to talk about. Like,
Yeah, I
especially when
was.
it comes to
So I visited your website, Insighte, and then
right.
I thought of a question that usually people get into depression at the age of teenage from the demography of 15 to 30. So why you are helping the kids especially because they are not at that kind of stress level or a depression level, and then you spoke about disability now, so I understood that this whole business model is dived upon disability.
Right, right. There's something
So
called neurodevelopment disorder. So, for example, 1 in 72 children has autism, right? Or
autism,
we look
okay.
at now in every class, at least 5 children gets diagnosed for ADHD, which is attention deficit hyperactivity disorder.
Yeah, yeah.
And to put in background, but probably something that you shouldn't put out. Like
A
I
lot of
also have
entrepreneurs
ADHD.
also go
Yeah,
through ADHD.
I also have ADHD. I'm also a very ADHD entrepreneur. Like
Oh,
and that's also like one of the realizations that made me stick to the space. Like I knew that for a fact that like I'm somebody who somehow was able to survive the system, and probably I should be like be able to help the lives in this space to be better. Yeah.
okay. Okay. So
So
talking about behavioral finance, I have gone through your profile, and I really want to know what is behavioral finance actually, and how does it play a role in startups? I mean, there are finance manager, there are virtual CFOs. So where does this behavior finance profile come in play?
okay, very interesting question, but at the same time, like it's very tricky as well, right?
Okay.
So okay, imagine like this. So you are growing up. At what age did you start using money? Like, did you start handling your own money?
22nd, when I was 22 at that time.
Okay. So before that, what was your thought of money?
I used to take from my dad. So like
So
personally,
yeah,
so
yeah.
thought of money was like I was waiting for the end of my month, then I would get pocket money from my dad, and then I used to like start saving it into 4 quarters. First will be my spending, and second will be my spending into education, and 75% would be my spending on eating and other purposes. So that was my thought of process, that I would get money from my dad and then I would wait for it.
Right. And what does your dad told you about money? Like, like generally you'll have
Okay.
discussions about money. So
Okay.
how was you?
Yeah. So our parents are actually very scared about this concept of money, and they keep on telling us that if you cannot save money, or if you cannot, I mean, like secure your money properly, then you will end up begging on a street somewhere else, and you'll not function properly in your life. So parents used to tell that way.
Right, right. So what happens is like, so you know what? So when we talk about depression or any other mental health thing, right? There's a certain programming that happens to you, like throughout your life. For
Mhm.
example, we started learning maths at 5 years of age or 4 years of age, right? And probably by the age of 16, 17, we are able to solve the more complex problems
Complex
in maths.
problems, right?
But for money, the thing is, we are never taught. We never taught how to do with money. And what we
Yeah.
all see is observation, right? Like we observe what our dad does with money, what our mom does with money, what do they buy, where do they invest. That's all
Mhm.
you see. And you're just watching it from outside. And for you, the thing is, because you never had money, you never had money all the while you're growing up, the tendency for you to the moment you get money is to spend it or
Oh,
to do something with it. So, for example, the first salary I got was 25,000,
okay.
remember. And I bought a 35,000 DSLR with it.
So
Okay.
you're already in 10,000 debt.
10,000 debt in your first month of
Yeah.
job, right? So that's the kind of thing that people do because you never had money. So when you get money, you want to buy whatever you want. It's the purpose of money for you, right? So this is like one of the bias that is there, right? So like that, we have a lot of biases that is cultivated in us when we are growing up. Like for example, say we want to. I mean, I don't want to use the terms because they're very complex. Like say loss aversion and a lot of terms for these things. But for example, I say, see, you would have seen your dad telling, "Don't invest in stock market. People lose money in stock market." Because see for them money so people generally like to maximize their gains and minimize their losses when it comes to money, right? But that is also biased. Like for example, when I'm saying I invest in stock market, I made 20 rupees. Tomorrow I see the stock market crashing for 2%, 3%.
Mhm.
If I'm already programmed to be loss averse, I'll immediately withdraw my money.
Yeah.
But probably if I just kept staying on invested for the next 3 months, the money would have gone up to a different viewpoint. All right.
Right. Right.
The same way, like how many times in life did you think that that startup video was something I already thought? Like you saw some successful startup, and you were like, hey, I thought about this sometime back. Right? Like you
Yeah.
would have thought the same thing. And you were right.
This was
You're like,
my
oh, it's
idea, and how this was my idea. I was going to make it. Yeah.
right. So it's called hindsight bias. So because you basically think that you knew it, but the truth is everybody can have that thought.
Yeah.
You didn't do anything about it. Somebody did something about it. So when you see a stock going up, or when you see some kind of like your friend doing an investment which you thought was good and he did well with it. Like for example, when Bitcoin crashed 30%,
Mhm.
1 2 months back,
Yeah.
I made one of my cousins just invest into it. Like so he invested 6,000 and he got 45,000. So I told two
There
cousins.
was there was a lot of mismatch about the Dogecoin. It used to go up
Correct.
a day before, and then
Yeah,
it used to crash down.
yeah. So I told him, see, 30% crash, you're going to recover. I don't know about how well credit is going to end up, but I told him, 30% crash, you're going to recover in another 3 months. And two, I told two cousins. So one cousin brought it for 6,000, the other cousin didn't even buy. Okay, so this guy made about 45,000.
Oh.
And the other guy is like, this guy made money, right? He's like, yeah, I knew it, but then I didn't want to take the risk. So these are like some of the biases which are already built in us. So what a behavioral finance guy does is, there are two, three things they do. One, if you are like what I do personally is I see a lot of people who are probably going through a financial crisis, and then because I come from a psych background plus a management background, right? I combine both. Then I probably advise them in telling, I need to understand these are your behavioral biases. And some of them have there's some emotional problems also attached to it. Like if you have grown, like you have like my mom, who grew in its family where money was always unstable. Like, there's not sure that tomorrow there is going to be rich or poor. Then you always have a very concentric sense of power things towards money. Like you always want to control and save money. You don't want to spend it. You have a tendency to do it. Or if you are on the other end where you don't know where to draw the line, like another very common thing you see in India is parents never tell the children about money, right? So there is always a secrecy about money.
Yeah.
So
Yeah.
what it does is, we like if you see any of your friends who are into trading and all, they'll post when they have profits. They will never post when they make losses.
Of course. Of
So
course.
so we are never taught to be open about these things. These are
Yeah.
like some of the biases that we are making communically saying, you tell your wife, you made profit, you made loss, you tell your wife that, and all that matters is don't look at each trade. At the end of the month, where are you at in terms of your trading, or where are you at in terms of your businesses? And another very common thing that you see a lot of Indians doing is they don't want to look at their budget. Now you see apps which shows you like this is a total expenditure spend, this is your total income, and everything will show it to you. But still, people don't want to analyze those things because it's a very Indian thing that like not Indian, just a global thing that people don't want to understand why they are spending.
Mhm.
Like, they want to spend and they have a guilt on spending.
Of course.
I bought stuff, they
On
have a
every
guilt.
spending. Yeah.
Yeah. So when I want to understand how I made my loss, I have to go and look at my own mistakes. And it's not a very easy place to go and look at. So a behavioral finance guy will make you go look at that place, but still make you sure that that pain point for you is a little reduced. By telling you that, by understanding this is your pattern, you are able to be able to do better. That those are some of the things that you make them do it. When it comes to financial industry as such, I do work with some startups in terms of giving them the behavioral decision making cues. So you use basically the nudging part, like how do you reduce, like for example, okay, ways in which startups use this information, like for example, you're talking to an investor, right? So if you can understand your investor's philosophy of money, or how investor thinks about your money, right? You'll be able to convince the investor better. Like you can do a lot of social analytics for that. Like you can probably look at his social behaviors and you can look at his channels to understand, is he a guy who flashes wealth, or is he a guy who probably talks about saving and frugal investing, like all the things. You can just probably look at what are the things that he talks about. You kind of get an idea his thesis of money. Everybody has a thesis of money. You understand that. And then probably if I'm sitting on an investor's table and I'm talking to them, I can probably phrase my pitch differently. Like for example, if I say, instead of saying my Q4 growth was poor, I can say we did 20% better than our peers in the last quarter, and we are probably gonna have a return of X. You said the same thing, but you probably phrased it in a manner that reduces the other guy's pain point. So there are triggers. Like if I hear someone saying that you're doing badly, I'm also triggered to not trust on you to invest.
Okay.
If I am hearing that there is a chance for you to maximize your profit. Like for example, I say, see, this particular idea has 66% of success. Then that is good. Then otherwise you go to another investor and say, see, this another 3 startups have tried this and this has failed, but I'm sure that mine will be successful. So your investor will always go for the pitch number A, right?
Yeah.
He'll say this is
Numbers
the
and
thing that is the most.
statistics are important.
No, how you frame the numbers and statistics is important. That's what behavioral finance is all about.
Okay.
Like this information is there, but when you give the information to someone else, you frame it in a manner that the person will buy it. Like for your customer, you want your customer to pay your invoice on time, right? But probably the customer is also going through a financial crisis. You say COVID, like he's also going through a financial crisis. How do you phrase it to your customer?
Oh, wow.
If you send him, if you send him a reminder saying pay tomorrow, due date is over, 5 day due date is over, late fees, late payment, all the things, he's also gonna get angry at you because he first of all he knows for a fact he can't pay. So what you do is you either send him a message saying we understand that like we all are going through some kind of a crisis. We are also going through the crisis. Let's support each other or something like that. You send him a positively worded message which kinds of eases his pain point, and you tell him, see, this month we have started probably a way to pay it in a bi-monthly thing. You can pay 15 days and 50 days.
Oh,
That
wow.
you don't feel this is a higher load on you. So it's all about picking the cues and then integrating as a nudge in your system. Give your customer a particular insight.
Yeah, wow. I mean, like, I never thought in this way that we could even convince customers to pay simultaneously in short terms. This is
Right. Yeah.
because we have been taught since childhood that money is a very burden kind of thing upon us. Either you have to earn as quickly as possible or spend as quickly as possible, but no one talks about saving it. So
Right. Right.
that's a very tricky and difficult thing to move on. Uh, so you might have studied a lot of investors, a lot of venture capitalists. I wanted to ask, uh, is emotional circumstance uh, a very important factor in investing, or people always go with the logics and practicality of the modern stock markets or even the markets? Because
Okay.
because see, let's take a scenario. If a person is going through a rare kind of depression or critical situation in that kind of moment, so
Mm-hmm.
do the investors act differently at that period of time, or I mean, like, does behavioral finance looks upon this also?
Right. So I got your point. So to be honest, like market is not a rational place.
Hmm.
Like market is probably 20% rational decision makers and 80% who are the rational decision makers. I have recently put a post on this thing. So there's something called meme stocks.
Hmm.
Like what a meme stock is.
Yeah, a particular meme that goes viral and then the
No, Dogecoin is a meme stock.
yeah,
Somebody
yeah.
created a funny Bitcoin saying, It's a dog coin, right? And
Hmm.
people, and it's now the third most valued currency in the world.
Actually,
There's no rationality that's going to support that.
right, right, right.
Or yeah, or you say that GameStop incident in US, like where that GameStop
Uh-huh.
stock, which is like a failed games company, got spiked up 200%, right? So internationally, you can see a lot of these kind of stupid trends. Like for example, even if you say Bitcoin platforms that's going to come, and people like a lot of Bitcoins are getting launched in the world, right? And people are just buying it, saying, "Oh, it's just 0.10 paise. Tomorrow it's going to be at least 30 paise. I want to make money," right? So that investor doesn't have a logic. So what happened is like when you look at the traditional market, so traditional market had structures, charts, and fund like what do you call as fundamental analysis and technical analysis. So investors like when I am investing, I am probably looking at a certain fundamental analysis and certain this thing and all. So now what all these newbie investors like which came in the market in the last 2 3 years with Robinhood in US and Saroda and all app stocks in India and all, what they do is so they don't care. They don't care about the fundamentals. They don't
Hmm.
care about the technical analysis. All they care is somebody saying this stock is going to do well, somebody this stock is going to do bad. And see, if for example, I can look at the worst stock and still tell the stock is doing well by just pointing some indicators. They're still not giving you the entire picture of it, right?
Okay.
You got my point. Like this stock has a momentum. Like when oxygen thing happened, there were companies which were like shit, like like companies which are like Depron, who had no businesses, who were doing so badly, which went 50, like sorry, 5 6x in the stock prices
Mm-hmm.
because of this particular bias that people like all these newbie investors like, oh, now all stocks are going to up. They just both start buying them. Like when sustainability is there, anything in stock with green will go up. So these are like some of the things which prove you that the market is not a rational place. People who invest in market are not rational investors. So what if you look at good investors, they do is they are always aware of their biases. Very important that if you're an investor, you're aware of your biases. If you don't know your biases, you're always going to end up making a loss. Like I said, right? So I look, most of the people I meet are people who made small profits and extra big losses.
Oh.
Like say they probably started with 2 lakhs or 3 lakhs in the market. I'm not saying about very high investors. I'm just saying like average Indian investor who probably started 1 or 2 lakh capital in the market. They would have made 10,000, 15,000, 20,000 for probably about six to. You have a streak. Nobody calls it a streak, right? They had some wins, so they made about 60,000. Somebody told them, bro, futures and options, you can make that 30,000 in one day, right? Like I am somebody who always trades in F&O. I don't trade in stocks. So somebody would have told him the same thing. And what he doesn't understand F&O market. He goes to F&O, invests the 2 lakhs, and loses 1.5 lakhs in one day.
Oh my God.
But he will withdraw the money. That's the catch. Because
Mhm.
he has never seen loss. And when the loss happens, because he has a bias towards reduce his loss, he'll just withdraw the money and he loses the money, right? So this is what happens with even when you look at for a startup also, even when you're investing into a business, like sometimes your money you don't know when the money is going to come out. Sometimes staying invested takes a certain courage to know that this money is going to give a return in the long run. For that, you need to have your own
Actually.
predictive models. You need to have your own predictions so that this is going to come in the future. Any particular question that you want to ask from the startup side, then I can probably answer from that direction.
Uh, which sectors, considering the current scenario, which sectors are investors thinking about more in investing rather than the healthcare?
Are you talking about VC investors or the stock market
No, no,
investors?
VC investors.
So I am not someone who tracks VC investments that much because
Okay.
it's not really my area of concern. Because like see, my startup is bootstrapped and we are part of two programs called MAT Siege. So MAT has a social enterprise alumni group. So we are part of that and one more incubator called RT Lab. So apart from whenever they send me for some pitch to do for my startup, I am not really concerned about that money because we have always been cash positive and we have been investing that money into us. Like so we have a
Okay.
sustainable model based on that. Right? So
Okay.
unless I want to scale nationally or something, I'm not really bothered. But right now, I'm working on a fintech product in the disability space. So for that, I'm probably scanning the space. So for me, like now, so I will be the wrong person to give you the prediction. So that's what I'm telling. Like even if I probably read an article and give you the prediction, I may be the wrong person to do it. So I probably don't want to touch.
Okay. Okay.
Yeah.
Cool. Cool. You can continue with the story that you were telling about the stock markets and all.
So like no, my question was like, do you want to know how startups can make use of these behavior decision models in stock market, or do you want
Yeah.
to know from an investor?
Yeah. Actually, because what I was saying is, uh, if somebody wants to be in this domain of behavioral finance, and if somebody wants to contribute to startups, so what will be his role into startups?
Acha, acha, okay. I
Yeah,
got your
and
point. I'm sorry.
or if anyone who wants to start his firm or venture, something related to behavioral finance domain, so how the scenario would be, and how would be the overall company uh, helping the other startups? So in this case, I
Right.
wanted to ask you.
No, I do. Also, generally, if you look at it as a career perspective, right? Behavioral finance, you won't find a particular course in behavioral finance. I think
Mhm.
IIT Bombay has a paper, or few of the I think IIT Madras and IIT Bombay has papers on behavioral finance. It's like an optional you can pick up. Otherwise, mostly you have to learn on this online. Like I also found this very interesting connection. Like somewhere later in my life, like there is a particular area where your interest in finance and your interest in psychology is merged.
Mhm.
So you can do a lot of certifications online. You can also do a certificate. You can become a certified wealth manager or certified financial plan, CFM or CFP, to give you that authenticity, saying you are somebody whom you can trust with the money. Then you can be a personal advisor and an investor, someone to invest their money, which is like probably if you are a good wealth manager, you can probably make a pretty like if you have a managing about probably say 5 crore of assets. So 5 crore is nothing much because any good client will give you about 25 30 lakhs. Uh,
Mhm.
5 crore is like probably 10 15 lakhs, and you can make a good living out of it, right? So that's something that you can do. And another good aspect of this is see most there are certified financial plans that are already there in the market, but they will not be from the behavioral financing. These guys also learn the biases. They generally only use it to do the first part where I assess the risk of the investor. Like anybody who's going, if you're probably getting it wealth managed tomorrow, you need 1 crore, right? And you're like, no, I don't have the time to manage it. Let somebody manage it for me. I give to wealth manager. So the wealth manager will always scan you for the risk profile. So at the risk profile stage, one part of what I do is done, where they basically profile you and say, this guy want to take. I'm just not using the right terms from there, but I'm just giving you terms. Like for example, say this guy is somebody who want to take higher risk, or somebody who is risk averse, or someone who says, I want to make short-term capital, or I want to make somebody who's want to make long-term capital. So there they make a match between your goals and your personality. Like you can just put it like that, the two simple words. Right?
Okay.
Once you do that, you can do it. So all the fintech apps which is into micro investing or into any savings or any bank-based things, right? For them, it's a very key thing because they have to understand their user who comes into the system, understand how this guy buys, understand how this guy thinks, so that I can recommend him the right products. So, I'll give you a good example. You go to, have you used Sarodaka coin? Coin?
Which coin?
Which one do you use to use mutual fund investing? Which app do you use for mutual fund investing?
So I've currently invested in Dogecoin a few weeks before.
Acha, acha. You do
Yeah.
not touch mutual funds, like never touched, never
No,
invested in
I
mutual fund.
haven't tried mutual funds yet.
Acha, acha, okay. So, okay, that's a very difficult example for me to tell. Yeah. So, but for example, when you go to any mutual funds platform, like you say Grow or Zerodha or somewhere, and you search for a mutual fund, right? Uh, I don't know. So every mutual fund has its own risk and kind of investment. So if you go to Grow, you can see baskets which are saying you want to better returns than FD,
Okay.
low risk, high returns,
Okay.
grow high growth. So each of them will have some like some risk indicators adjusted to it. So these are all behavioral finance principles where they say this particular user who probably has a higher risk is going to pick a stock from that basket. If he's somebody who wants to avert his risk, you are going to pick somebody from this, something from this. So the more you know your user in terms of his financial decisions, you can make him drive towards multiple purchases. And this is in the fintech industry. I am as a business owner, or like if I am somebody who's in a traditional startup, I run another startup and I probably do some program, I do some coding. I'm just a coder in a startup. Right? I can still nudge you to make a lot of behavioral decisions in that app for purchases. Like you have an e-commerce app, and I
Yeah.
am an e-commerce engineer. If you know behavioral finance, you know that if like I think see, I'm telling Flipkart and Amazon all have a lot of behavioral finance decisions already there.
Yeah.
Like
Yeah.
you go to you yeah, so you go there, you pick up one thing, then they'll say, kindly buy these two things. Most commonly bought things with these two things. Right? These are all very behavioral finance decisions because this guy is looking for this. His next ratio is going to be buying for this. And if I show him at this point of time, he's most likely to say yes. Um, and if you look at Swiggy or Zomato, when you check out, they add that minimum what do you call us? you call it, minimum donation at 10 rupees, 20 rupees, 30 rupees, and they say most commonly tipped price. Then
Yeah.
your mind is like, shit, am I so cheap to click below that? I will always click that or this. So you're nudging him to pay you a higher amount for the particular thing. So all this comes from behavioral finance principles. It's always good to know, the behavioral finance. So I would suggest to read. There's a book by Tony Robbins called Money Master the Game. So Tony Robbins is somebody who's into NLP, Neuro Linguistic Programming.
Okay.
So a lot of NLP is being used in this place. Another book is called Nudge.
Nudge.
Nudge, yeah. There's a good course in Coursera on behavioral investing. I think it's by Duke University, if I'm right,
Okay.
which kind of covers all the biases. Then you also have atomic habits,
Atomic
forming
habit.
atomic habits.
How to form your
That,
atomic. Yeah.
yeah, you will find a lot of points on that. How to do the habit formation now. There's a book on gamification. I'm not able to remember the author's name, which also talks about a lot of creating those behavioral nudges, to in terms of the apps and interfaces and all to use it. So yeah, so that's where it generally gets applied. If you want to look at for a career, you generally get it as certification, and then you try to use those things in your your decision making in UI UX, or probably in the finance checkouts and wherever it is.
Okay. Talking about investments or savings, uh, what would be your advice or suggestions to millennials who have just finished up their degree to invest,
Okay.
where to invest, uh, how to uh, how to manage their finances, basic finances?
Okay. So I do take a class for teens on investing. So like it's like a program that I run every once
I'll
in 3 months.
definitely know them. When would be your class? Can you just tell? I'm like, when are your
Sure,
classes?
sure. I'll do that. I'll send it to you. Okay.
Okay, sure.
Yeah. So generally, what do you do is, so first part I said, first is understanding what is your, like, for example, okay, let's look at somebody which is an easier population. Who students don't have money. Let's look at somebody who probably just started earning, like somebody who's just in the start of their financial journey, like they got a job, they probably making some money, or they started a business, they're just making some money. Let's look at that population, which I think will be your audience also, right? So when you're doing that, first thing you need to understand is you have to understand what are your financial patterns. You have to spend the first probably 1 month in just observing your finances. Now we have a lot of apps to do it. Like you can use a Donut or a Wallet, or you can use Wallet, In Money, or any of those apps to track your expenses. Like understand where you're spending your money. Once you do it, you probably put it into brackets. Like you said about the 4 different buckets, right? The same rule. The problem with the 4 buckets is in your head it's difficult to plan where which bucket the money is going to go. So the first thing is understand your expenses. Then you try to put them in the buckets and say this is where your money is going. This is where your money is going. And you kind of get an idea that you are able to save. So in the starting of your career, you may not be able to save much. So I will say look at saving 10% of it. You get 20,000, look at saving 2,000 of it. Don't try to push yourself to save very high. You getting 20,000 and trying to say I'll invest in Bitcoin for 10,000 today, and at the end of the month when I lose money, like less money, I'll take the returns on the market. That is not the right way to look at investing, because what you don't understand is like it's like so this is like stock market is like a sea. So you throw a coin into it, you expect the 2 coin to come back.
Yeah.
You never know if the coin will come back or not, because you
True.
cannot predict the model of the stock market. You need time
And it also requires a lot of practice initially, and a lot of
correct,
you have
correct.
also have to face a lot of loss before while getting into proper predictions.
Yeah. So in BL finance model, what you tell us, like you have to first feel confident about your investing habits. Like it's like a relationship. Like you're dating someone. It's the first date. On the first date, don't try to make out. So you just probably go to the person. Like you probably okay, put that 2,000 in a SIP or a mutual fund.
Essentially,
Understand how that particular mutual fund works. You look at probably going through what are the stocks that particular mutual fund is investing, because those are like you have people who are managing your fund, who are fund manager experts, and they are picking those stocks. So which will kind of give you a good idea that this is the mutual fund I need to pick, and this is the kind of things. And then you understand things like expense ratios. So a lot of even when you're investing Bitcoin, right, a lot of money of yours is going in the charges, people in which they never talk about, like, and these charges form a huge percentage when you look at returns. Sometimes it can be about 20 to 30% of your supposed return that you want to get back. You look at the whole thing. So I think I'll give you a good example. So yesterday, Tanmay Bhatt posted a video about investing in US stock market,
Hmm, hmm,
saying you can use in money to invest in US stock. But what he didn't talk about is the 1,000 rupees will go as charges for each investment that you do over there,
hmm, hmm, hmm.
and
That
you
was the
have to
main
pay
thing
X and
actually.
X. Yeah, and you have to pay X and X taxes. So unless you have a certain capital to invest in US stocks, going and buying 3,000, 4,000 rupees per year, if you buy in money and US stock, you're going to incur loss, which they are not explaining to you. So and now there are a lot of YouTube advisors who are giving you a lot of information. So also understanding from where you pick that information is also key as a new age investor. First always invest in your financial education in a proper financial coach. It may not give you much things. Like for example, understand what budgeting is. Budgeting is a key skill to have, right? Even before investing, understand budgeting, and then you understand what are the different instruments available to you. What instruments make sense to you? Like say even if you say even some people say FD is below inflation and all, right? But if you are somebody who don't want to take the risk and want to know what a return feels like, invest in an FD. I will not say no.
Yeah,
Or if you say gold is a good investment, buy gold and see. See, you can always progress towards buying the other stuff, but always start with something where you are comfortable and you know the
comfortable in.
instrument.
Yeah, yeah,
Yeah,
and
yeah,
you can also expect a good return from it.
right. Yeah. And always plan your insurances upfront. So that's another advice. Like, start your health insurance, have a life cover insurance upfront, because especially in this world, it's very key that you have some insurance coverage. If you're from a company and your company covers for it, you don't have to buy separately. But otherwise, you need to have your insurance, especially if you're a startup entrepreneur. You need to have your insurances for your business as well as these two things. Even if every year you have to spend 20,000 for that insurance and the premiums and everything, you need that, because that is what is going to protect your downside. If tomorrow something happens to you, you are admitted in hospital, your entire savings can get wiped away in that one shot. So probably that health insurance is going to save you for that particular crisis. So that is a key thing. Another thing that you probably start looking at is like, how do you learn about investing, right? Like, so once you do mutual funds, then you understand that this is the thing. Then you probably go buy stocks which are lower risk, uh, which are giving sustainable returns for the last 10 years. Like say blue chip stocks like Infosys or Wipro or something, which all the period has given good returns. And
Mhm.
another wonderful instrument that is there is called ETF. It's called Exchange Traded Fund, which not many people talk about. The reason why people don't talk about ETF is because these mutual funds who run ETF don't make much money,
Okay,
because in
okay.
ETF the expense ratio is very less. Because see what they do is what is a for example when you started an ETF when our stock market was at 35,000 points, and probably 3 years now, yeah, now it's at
Mhm.
50,000 points, right? You made 15,000 point gains, because ETF is all about investing on that particular thing. If your market goes up, and the history is that in every 10-15 years, your market has gone up probably 10-15,000 points. You're definitely going to make money on an ETF return. And that's a very validated model throughout the world. And your expense is minimum, because see, for a mutual fund, they charge somewhere between 1 to 2% in expense ratios and fund management cost and so many other costs. In ETF, it can be 0.10, 0.20, 0.30. So whatever returns you're going to make in the next 10 years in compounding is going to be your long-term returns. And it is not affected by any stock, right? Because if the market goes up in the next 10 years, you're going to make the money. Small movement doesn't matter to you. At the end of the day, even a dip that you get in between, and you buy in that month, you're still making money out of in the long run, right?
Mhm. Mhm.
ETF is a wonderful investment for you, which nobody really talks about. And then you want to get into the fancy stuff like blockchain or Bitcoin or whatever it is,
Cryptocurrency. Yeah, yeah.
crypto, whatever it is. And
So
some people
I want to
decided,
add a question in this.
sure,
How important it is to be get influenced by a particular person in cryptocurrency, because as soon as whenever Elon Musk tweets something, the stocks
right.
goes as high as possible. So how important it is to be get influenced by a person? Are the coins who are paying the particular person something, or is the person who is investing into it and making it an insider trading, that would be like he want to make profits out of it, so he's using this advertising audience advertising strategy where he could put a gimmick and to take the market up. So what are
Right.
your views
So
on this?
you already predicted the model. So that's what's happening. Like, so what he's doing is, see, when you are an investor,
Hmm.
you have two strategies to make money. So the traditionally what everybody does. So traditionally there are two ways in people make money. Like if you are getting into the stock market, you're always a tendency to buy the stock. You're always a bull, right? I
Hmm.
mean, you know the terms like bull and bear and all those things, right?
Yeah,
Yeah.
yeah, yeah.
So most of the people who enter the stock market are bulls. because they're coming into the market thinking the market is gonna go up. I am a proper beer, like I always predict the market is going down. And now I am making money on market going down.
Yeah.
Like, so what I do is every month I buy Nifty. I mean, this between, I don't tell anyone because it's not a right investment strategy to give anyone.
Okay.
So I use a strategy called straddle. So what I do is every month I buy two Nifty things. Like for example, if now it's at 15,750, I already have something at 5,400. I'm predicting the market is going to crash 350 points.
Okay.
I also have another call option at 16,000. Like saying the market is going to go up 16,000. So if you look at it in a 1 month, the market is going to have an upward swing and a downward swing. Sometime, like this will be like, oh, tomorrow more than was free vaccine. Now let the market go up, or something happened in Uttar Pradesh, let the market go down. And so market will always have the swing. And see, the moment market something goes down. So the thing about downward swing is, like you say, these people I said, right, the new age investors who are like these who stick on to the thing. So they have a tendency to the moment a small crash happens, they just take out all the money, like which what happened
Yeah.
in Bitcoin also. Like you take out all the money, but you took out the money, but you still don't know where to invest. So what we generally tend to do is you probably go to another stock or another thing, and again you put back the money there because you still don't know to get out of this market, because this is the only place where you know how to make money, and it will come back to the market. Or more people who were standing outside seeing this higher valuation, and who are, like I said, the friend who told you the story of startup, right? Who I told, oh, I missed, like my cousin, other cousin who didn't invest in the last time, he would have been like, oh shit, this came again. This time it's again going to go up. I'm also going to make money. So people who
Yeah.
are outside the market will gem in at that thing. So if I am somebody who is going to predict saying, see, it's going to crash 300 points and I'm going to make money at this point. That guy made this, you got my point. That guy still made only 5%, because he went down 30 and again came back. He just made 5% of whatever returns that is there. But the guy who joined at the bottom made how much? He made 30%. If he sold it at that point, he made 60%.
Oh my God.
Got the logic?
Yeah.
So that's what this guy is doing. So he buys, he knows. See, I know my market momentum is going up in every 6 months, it is going this much. And then the market gets stuck. Like, like it's what you call as resistance levels. If you learn about markets, called resistance and support levels. It hits a resistance level. Every currency, every stock, everything has a resistance level. Once it hits the resistance, what a short seller will do is he will create some kind of a crisis in the market, saying, this industry is gonna get affected. Money control by Reliance is a good example. Reliance owns money control, right? So any news that Reliance want to churn out, money control does it for them. So that's the
Okay.
reason why Reliance never crashes. Yeah. So I was just telling, the Reliance thing. So they manufacture news. So they manufacture news which always propel their stocks up. Whatever Reliance invested or Reliance kind of a thing. So they always do it. That's what even Elon Musk is doing globally. So he sells at this point. He knows for a fact he's going to crash. So he says, "Oh, now Bitcoin is not sustainable. Let me sell it." And then Bitcoin, and he sold it. He sold it
Crashes
even
down.
before you think that he's going to sell it. And you sold along with him, and the market came down. So he would have made a short call at this point. When he's selling it, he's saying he's already bought a short call saying, I'm going to buy it at 40% low, 30% low. So when it went there, he again bought it. So he got the returns for the 30%. It is not when the falling is getting 30%. Even in the fall, you can make money. So that's what the bear does, right? Like you have a sell and you make money. So he made a money in that fall. He again made it go up, another 30% going in. So he made 60% in that just 1 week in Bitcoin,
Wow.
right?
So there are certain
Yeah.
strategies that you need to. Might be a little silly question, but I have heard this a lot of times that uh, you can earn a specific amount. There is a certain target in stock markets or in cryptocurrency or in share markets. You cannot be a
It got
billionaire.
stuck again.
You cannot be a billionaire just by doing this thing, because after all, an investor moves into investing in startups also, and from there he gets a certain amount, and from there he starts building his empire. So is it true that you cannot
Okay.
be you cannot have
Uh,
a billionaire kind of thing in stock markets or cryptocurrencies? Is that true?
so there's two things. Okay. So there is something called magic of money. Okay. And this is like don't tell, like don't put anywhere, but just giving like
I also think that stock market has this dominating persons on the above side who is controlling the market and then distributing the money according to the investments. Is this true? I mean, the one who
so
is
all these are Yeah. So all these are like, for example, Coca-Cola is owned by Warren Buffett, right? So there are certain logics to all this. Like, for example, if Junjunwala is buying into this thing, always the person who controls the share owns the market, owns the particular stock. That particular stock's the market, not dealing the market, the stocks market.
Mm-hmm.
So I'll give you a good thing of it. Like, so what people miss out when they say about wealth. So one is making money is one. Second is making wealth. You don't make wealth by having a single investment. Say, I invested in stock market. I don't make money because you miss out on the most important thing in money, which is called compounding,
Yeah.
right? So your return is always